Joining me now is S&P credit analyst Anthony Walker. Anthony, thanks for your time. Federal budget is in just over 2 weeks. What do you see as the big fiscal challenges facing Australia right now?
Yeah, we're expecting quite strong fiscal outcomes to be announced. We think the government will be conservative. They'll announce a small surplus. We think the surplus could be as high as $20 billion, which is in line with last year's. So we think right now the fiscal challenges they're not that challenging right now for the next 12 months. Going ahead, though, as the economy slows, we will start seeing unemployment rise. That means that the government's tax takes will start to weaken compared to previous years. At the same time, we are seeing constant pushes from the community and households for government support. So we do think that this will be a peak in the outcomes, and then going forward in the next couple of years, we'll see the government potentially return to a small deficit.
Yeah, looking broadly at some of the big issues the government's facing, spending's on the way up, wage rises, weak productivity. Which of those do you think is one of the biggest concerns for them?
We think they're all of a concern. We do think that going forward, productivity is a big issue for the economy. We have seen for a number of years the economy underperforming government forecasts on this. We do know that the intergenerational report usually has productivity picking up, and that's going to save the day. But in reality, it's been very, very difficult to get productivity higher. In fact, the last couple of years, it's been very weak outcomes on productivity. On the wage front, while wages for the government are increasing their wage bill and their expenses, this is actually turning out good for the government when it comes to things like the tax take. We're seeing bracket creep pick up, we're seeing inflation in wages. That means personal income taxes are rising at a rapid rate, and that's great for a government's budget.
So you expect we could see a surplus around $20 billion coming up in just a couple of weeks?
Yeah, we don't think the government will say that, but we think when the outcomes come out in a few months' time, when you look at it, the first 8 months this year, the government's budget is tracking $10 billion better than last year, and last year they delivered a $22 billion surplus. So when you throw that together, you'd be expecting something around the same amount if they keep their fiscal discipline.
Yeah, your most recent report affirming the AAA credit rating September last year, in that you mentioned really the strength of commodity prices and the strong employment market. And when you look at where things are at now, it seems pretty similar today as it was back in September.
Yeah, that's correct. Commodity prices, iron ore, for example, still $115 a tonne. Unemployment around the mid 3%. That's well below the forecast of the government. They had it around 4.25% by the end of this fiscal year. At the same time, they had iron ore prices coming down to $60 a tonne. So while things aren't as good as they were a year ago, these data points are still extremely good for a government's budget.
One thing the Treasurer's Jim Chalmers has spoken a bit about this week has been weakening growth around the world. And we saw some numbers on Friday morning from the US showing GDP there is now growing at its slowest rate in about 2 years. I mean, how big a challenge is this for Australia?
We think things are actually okay at the moment. Only about a month ago, we actually revised our global growth forecast from 2.8% to 3.2% globally. That included a very large revision for the US economy. So while things are slowing down compared to the last couple of years, that's expected. Interest rates around the world are significantly higher. Reserve banks are trying to pull back on demand and growth, and this is what's playing out. But at the same time, the US economy, for example, is still really resilient. We're seeing growth around 2.5%. So we revised that up 1% for this fiscal year, which is a massive increase in the world's biggest economy. When we look a bit broader, you look at China, we still have 4.5% growth. That's not great for the Chinese economy, but that's still not bad, and we haven't revised that down in the last 6 months. And then we look at India. India is a very important market for us. It's a developing market that we're entering into. That's still growing at around 7% for the next 3 or 4 years. So yes, things aren't as good as they were in the past, but we're coming off a very big post-COVID boom. Things are going back to normal now, and the global economy, despite a lot of geopolitical risks, is actually doing reasonably well.
And this week, domestically, we saw the March quarter inflation numbers come in a little bit hotter than expected. We know the federal budget is going to be giving tax breaks back to Australian people and businesses. Is there a bit of a risk that inflation could jump in the September quarter with a bit more cash going back into the hands of Aussies?
Yeah, and we're watching the budget for this, see whether there's actually new announcements as well. When the government did change the tax reforms, we actually put a note out at that stage saying we think they are going to be marginally more inflationary than the former government's policy. When you're giving tax cuts to high income earners, they're going to save a lot of it. when you give it to low-income earners who are living day by day, they're going to spend it. So we actually do believe they'll be marginally more inflationary. By themselves, we don't think that will change the outlook. We do think that the outlook for inflation is still going to be a few years before the Reserve Bank gets it to target. We think it will be late 2025, if not early 2026, before they do it. So we do think that the last bit of inflation is going to be much harder to get rid of it than the actual beginning of this. And we've seen that globally. We've seen the US economy really stuck in the low to mid 3% inflation. And we think the Reserve Bank's facing similar challenges.
Now, just looking at some of the states, I know you were the first ratings agency to cut New South Wales from AAA down to AA plus back in 2020. New South Wales this year have now been stripped of billions of dollars in revenue from the GST carve-up. How tough a job does the New South Wales Treasurer have right now?
Yeah, this is another focus point for us this year, is that the government came in on the promise to turn things around. They did make a lot of big announcements last year, but losing roughly $12 billion of GST in their forecast, it wasn't actually money in their pocket, it was actually in their forecast. That is going to be a big headwind. So we are expecting to see that government have to increase its savings, to reduce its spending, to try and counter this loss of revenue. Now, this revenue may come back in a couple of years' time, but at the moment, what we're seeing is the New South Wales government is underperforming what we're thinking it should at a AA plus level.
Okay, and what about Victoria, rated AA stable? You're obviously based down there. Its budget's released next month. How tough is the debt situation that the Victorian government is facing at the moment?
Yeah, Victoria has had a massive ramp up in borrowing. We do forecast it to be about triple what it was pre-COVID in just a 4 or 5 year period. This has obviously weighed on the rating. We did lower it by 2 notches in one go from AAA. It was the first time we've ever done that to a subnational government. They are facing challenges. We've seen a massive cost escalation for one of the biggest roading projects in Victoria's history. We think there's more to come for that road. At the same time, they are saying to dig tunnels for the suburban rail loop, and there's been a lot of critical kind of opinions on that from the Auditor General, the Ombudsman, for example. So we're really keen on seeing how they deliver these kind of massive projects to budget. Interestingly enough, on the flip side of New South Wales' issue with losing $12 billion of GST, Victoria is gaining $3.5 billion this year. So that should actually be a really good injection to the Victorian government budget.
And then the other government that is the big beneficiary from GST, Western Australia, we've already recapped commodity prices, but you upgraded them to AAA roughly 2 years ago. What's the outlook like for WA?
The outlook for WA has been for a while and continues to be much better than peers. It is very strong fiscal outcomes. Iron ore, again, it's $115 a tonne. Most governments are facing or forecasting a $60 a tonne forecast. GST revenues are continuing to flow into WA. So we do think that WA is a clear outperformer, not just domestically. It's one of the strongest subnational governments we've seen in the world. And that's why it has been rated AAA, and that's why we think it will retain that AAA rating.
And Anthony, we've only got 30 seconds, but just broadly, how positive are you about the rest of this year for Australia's economy?
Yeah, we think that things will slow down. Obviously, with borders open and we've got a very big intake of migration, the high-level data when it comes to GDP will be quite strong. We are positive overall, but on a per capita basis, there are headwinds, and we expect these headwinds given the Reserve Bank has raised interest rates so high. So things are playing out as we expect, and the economy, like the US economy, has been very resilient and doing quite well.
Anthony Walker, S&P credit analyst, thanks for coming on the program today.
Thanks for having me, Ed.